What is going on, everyone? Welcome back to the channel. Today is April 30th, 2026, and let me tell you, the market is absolutely electric right now. We have got a semiconductor giant going parabolic, a beloved consumer brand breaking out, a fintech name getting absolutely crushed, and crypto feeling the heat. I am going to break down the top 5 stocks moving the tape today, give you the full technical picture, key levels to watch, and my 3-month price targets on every single name. This is going to be a packed 8 minutes, so let's get right into it. Do not touch that dial. Alright, let's kick things off with the biggest story in the market today. Intel Corporation, ticker Intel, absolutely on fire right now, up 12.1% to $94.75. And folks, this is not a small company, we are talking about a nearly $476 billion market cap. This move is monumental. Now let's talk about what is driving this. Intel is trading right at its 52-week high of $94.95. Think about that for a second. Less than a year ago this stock was trading at $18.97. That is a nearly 400% move off the lows. This is a full-on resurrection story, and today's move is telling us the market believes it is real. Volume today is coming in at 229 million shares versus an average daily volume of about 198 million, so volume ratio of 1.15. It is elevated but not insane, which actually gives this move more credibility. This is not a short squeeze or a gamma ramp, this is real institutional buying. Now technically speaking, the RSI is sitting at 87.3, yes, you heard that right, 87. That is screaming overbought on a short-term basis. The 20-day moving average is 66.34, the 50-day is 53.53. The stock is trading nearly 43% above its 50-day moving average. That is an extraordinary deviation. But here is the thing, in strong momentum breakouts, overbought can stay overbought for weeks. The 6-month low was 33.62 and we are now at 94.75. Momentum is the story here. The PE ratio is showing 0, which tells us Intel is not yet profitable on a trailing basis, they are in turnaround mode. But the market is pricing in a future where Intel regains semiconductor relevance, potentially with foundry wins and AI chip contracts coming into focus. My 3-month price target is $102. Support is back at the $80 level and resistance is that 52-week high at $94.95. I am rating Intel a hold at current levels, not because the story is bad, but because at RSI 87 you simply do not chase. Wait for a pullback to the $78 to $82 zone before adding. Alright, now let's talk about the most painful stock on our list today, SoFi Technologies, ticker SoFi, getting absolutely obliterated, down 15.44% to $15.52. Volume is coming in at a staggering 198 million shares, that is 2.44 times its average daily volume of 81 million. When you see that kind of volume on a down move this sharp, you need to pay close attention. So what happened? SoFi released earnings or guidance that clearly missed expectations, whether it was loan growth concerns, net interest margin compression, or guidance cuts, the market is speaking loudly and brutally. A 15% single-day drop in a $20 billion financial services company with nearly 200 million shares traded is not noise. That is institutional distribution. Let me walk you through the technicals because they paint a concerning picture. The stock is now sitting right at its 20-day moving average of 1759, well, actually it has broken below that. The 50-day moving average is 1773, and the stock is trading nearly 12% below both of those levels. The RSI is at 45.7, which is neutral but trending lower, it has room to fall further before hitting oversold territory around 30. Here is what worries me most, the 6-month high was $32.21. We are now at 1552, that is a 52% drawdown in 6 months. The 52-week high is 32.73. SoFi was a market darling and right now it is in a full-scale breakdown. The 6-month low is 15.15, and we touched $15.52 today, we are basically sitting on that floor. The PE ratio is 34.5 times earnings, which is still not cheap for a company that is clearly struggling to execute. My 3-month price target is $13.50, yes, I think there is more downside. Support is at that 6-month low of 15.15 and if that breaks, we could see $12.50 pretty quickly. Resistance is now up at that $17.50 to $18 zone where the moving averages sit. I am rating SoFi a sell or at best an avoid. This is not the knife you want to catch today. Okay, let's shift the energy entirely because Starbucks, ticker SBUX, is giving us a very different story today, up 8.45% to $105.50 on volume of 25.4 million shares, which is 2.46 times its average daily volume of 10.3 million. This is a big, confirmed breakout move and the technicals are backing it up. Now let me set the context here. Starbucks has been on a massive recovery arc. The 52-week low was $77.99. Today we are hitting $105.50, which is also, and this is important, a new 6-month high. The market is telling you the turnaround story under new leadership is gaining traction. Same-store sales numbers, cost discipline, or a positive guidance revision are likely driving today's pop. Technically, this chart looks beautiful right now. The 20-day moving average is 97.47 and the 50-day is 96.45. The stock is trading 8 to 9% above both of those levels. That is a clean breakout above both moving averages with strong volume confirmation. The RSI is at 73.3. Yes, that is overbought territory, but in a momentum breakout with this kind of volume, 73 RSI is not automatically a sell signal. The 200-day moving average is also sitting right at 105.50, the exact current price, which means Starbucks is reclaiming that critical long-term moving average today. That is a huge technical milestone and will attract more institutional buying in the coming days and weeks. Now the PE ratio is 80.53 times earnings. That is rich. There is no way around it. Starbucks is being valued for a perfect recovery, which means execution risk is elevated from here. The 52-week high is 107.27, so there is only about 1.7% of additional upside to that level before we are in blue sky territory. My 3-month price target is $114. Support is at that $100 to $102 zone, and resistance is the 52-week high at 107.27. I am rating SBUX a buy with medium confidence. The trend is your friend, but do not overpay. If you are not in, consider a partial entry here and add on any pullback to the $100 to $102 support zone. Next up is the gold standard of payments, Visa Incorporated, ticker V, up a very impressive 8.26% to $334.86. Volume today is 16.6 million shares versus an average of 8.9 million, volume ratio of 1.86. For a $637 billion company to move 8% in a single session, you need a seriously compelling catalyst, and Visa delivered. This is almost certainly an earnings-driven move. Visa's business model, collecting a toll on every swipe of a card globally, is essentially recession-resistant and the numbers are reflecting that resilience. Cross-border transaction volumes, consumer spending data, and potentially an improved margin outlook are the likely drivers. The technicals here are very strong. The 20-day moving average is 310.14 and the 50-day is 310.27. Visa is now trading about 8% above both of those key levels with strong volume behind it. The RSI is 73.8, similar to Starbucks, in overbought territory, but in the context of an earnings breakout that is acceptable. The 200-day moving average is right at 334.86, again, exactly where the stock is trading, so just like Starbucks, Visa is reclaiming its 200-day moving average today. That is massive. When you see a blue-chip stock like Visa reclaim the 200-day on 8+% volume, that is institutional money rotating back in with conviction. The 52-week high is 375.51 and the 6-month high is 356.82. So we have about 6 to 7% of upside before hitting that 6-month high at 356. The PE ratio of 29.14 is actually quite reasonable for a business with Visa's earnings quality, moat, and growth trajectory. My 3-month price target is $365. Support is at the $310 to $315 zone, that confluence of the 20 and 50-day moving averages, and resistance is the 6-month high at 356.82. I am rating Visa a buy with high confidence. This is the highest quality name on our list today, and the technical setup combined with earnings momentum makes it one of the most attractive risk-reward opportunities in the large cap space right now. Alright, last but certainly not least, Coinbase Global, ticker Coin, down 6.37% to $181.73 on volume of 12.5 million shares versus an average of 8.3 million. Volume ratio is 1.52, meaningfully elevated, which tells us this is not random noise. There is real selling pressure here. Coinbase is essentially a leveraged bet on the crypto market. When Bitcoin and the broader crypto ecosystem are under pressure, Coinbase feels that pain amplified. The trading revenues, the custody fees, the transaction volumes, they all correlate directly to crypto market activity and sentiment. If crypto is getting hit today, Coinbase is going to take the stairs down. Let's look at the technicals. The 20-day moving average is 187.57 and the 50-day is 186.56. Coinbase is now trading below both of those levels, not dramatically, but the trend is pointing the wrong way. RSI is 56.4, which is neutral. It is not oversold yet, meaning there is room for more downside if selling pressure continues. Here is the sobering context: the 6-month high was $343.78. We are now at $181.73. That is a 47% drawdown from the 6-month high. The 52-week high is $444.65, so from peak to today's price we are talking about a nearly 60% drawdown. That is the volatility you sign up for with Coinbase. The 52-week low is $139.36, and the 6-month low is $141. So we have about 22% of downside to the next major support zone if this selling continues. The PE ratio of 40.84 times earnings is elevated for a company whose earnings are highly variable and dependent on crypto cycles. My 3-month price target is $165. I think the path of least resistance is lower in the near term. Support is at that $141 to $145 zone. The 6-month lows and resistance is now at those moving averages in the $186 to $188 range. I am rating Coin a hold. If you own it, I would put a stop loss below 160. If you do not own it, this is not the entry point. Wait for a test of that 141 to 145 support zone before considering a position. And there you have it, folks, your complete breakdown of the top 5 market movers on April 30th, 2026. To recap the ratings, Intel is a hold, incredible story, but RSI at 87 says wait for a pullback. SoFi is a sell, too much technical damage with volume confirming distribution. Starbucks is a buy, the turnaround is real and the chart is confirming it. Visa is a buy with high confidence, best risk reward on the board today. And Coinbase is a hold, watch that 141 support level closely. If this video helped you make sense of today's market action, smash that like button, it genuinely helps the channel more than you know. Subscribe and hit the bell so you get these daily breakdowns the moment they drop. Drop a comment below, which of these 5 are you trading? I read every single one. See you tomorrow, stay sharp out there.